Alright, hello everyone and welcome to another article video. If you're new to the channel, my name is Meydan. I'm a fintech entrepreneur and a finance professional, and our fintech pre-calculates the swing days, the swing hours in the market with a price calculation model. So what we want to do is preemptively calculate market turns, both in terms of swing days, swing hours, and with a good pricing. So let's see what we've got today. Today's article is going to be, let's first of all get me out of the way here. All right, it's unlocking profit, time and price analysis for trading multiple markets. Let's get into it. Now, as you know, many markets are correlated. The problem with many markets being correlated is you can use them to hedge, but at the same time, you have to understand that hedging can be a two-edged sword. So what we need to do is basically, when correlating things, we can preemptively calculate when the market's going to turn for both assets, right? If they're correlated and our calculations are like correct or very accurately or very close to accurate, then the swing days and the swing hours should correlate to those assets. So when they correlate together, then we can confidently say that, okay, you know, these are going to turn together, or both of them going to react together. So knowing that in advance, and also having a decent pricing model like we have on the PST, which is the last video I've done, then we can actually reduce the risk that we're taking, and plus we can enter correctly. So let's take a look at trading multiple markets. Now on my screen as well, sometimes you'll see me doing on this, for example, screen, I've got gold. As you can see, that's gold. I've got the euro dollar, and I've got the SP 500. So these three things are on there, and basically they are correlated to each other, and I can check them all at the same time, and the indices pretty much go together. So if I'm looking at the SP 500, I can confidently assume that the Dow and Nasdaq will probably go in the same way, although there are certain exceptions, and these exceptions are actually important to know because, for example, let's put this up here again. For example, these are the swing days for the week of the 16th to the 20th of June, right? So here, as you can see, I've got SP 500 Monday or Tuesday, and then I've got a swing day Thursday or Friday. So, and on the Dow Jones, I've got Monday, Thursday, and on Nasdaq, I've got Wednesday, Thursday. So I'm looking at what I've got in common here. I've got Thursday in common on all of them, and then on the SP 500 Dow Jones, I've got Monday in common in both of them. So I'll be looking out in, specifically for these days, and this Thursday being a common one on all of them. Now also, if you take a look here, I've got euro dollar Thursday, Friday, and I've made a note here saying Thursday can be a big move day, right? So that's like interesting, because if it can be a big move day for the euro dollar, then that means we could have probably a big move day if Thursday is a swing day for the indices as well. So that's something to look up for, okay? But how do I calculate it? I calculate the swing days separately. So euro dollar and the Dow Jones, or the SP 500, Nasdaq, they're going to have different calculations. They're different assets, but knowing that this correlation between them exists is going to help us out. So we will know what day to really look out for. Therefore, we can kind of like preemptively, let's say, plan our trades according to what's coming up in those days. Okay, so that way we protect ourselves from the volatility, and we also know when the action is going to happen. So knowing that is like very, very important. And also on Thursday, I already have the hours as well. All right, and as you can see here, this is the pre-New York session. My time zone is UTC +3. I'm on the Mediterranean city of Antalya in Turkey. And here, as you can see, I've got the all the trading hours when I'm expecting volatility. And today as well, as you can see, I've made a few comments here about how the market, I think, should move according to these hours. And I've noted here that if the market does turn in New York, we should expect that move to continue towards closing. So therefore, then having targets according to that direction is going to help us out no matter what we're trading, whether we're trading gold, indices or whatever. And in fact, I've noted this zone for gold. Now gold has a swing day, as you can see, tomorrow, okay, Tuesday. This means gold should be somewhere by the end of the day, somewhere where we should want to look at trading it. whether you want to buy it or sell it. Now, do we know if we want to be buying or selling? Well, if it is low, we do want to know. We want to buy, obviously, when the price is cheap. So I've got a price model here, which from the PST video, you will note that it is the red line here. That's the one of the lines on the PST, which is giving us a price. Okay, so I've got a price on the daily 57, which is 3,396, and I also have a price here on the weekly. Let me just do this here. Let's move that down here. I've got a price here at 67, which coincidentally is also 3,396. So tomorrow being a swing day, you know, if we dip down into here, let's say the market goes sideways today, but tomorrow we dip into this zone, then at a trading hour tomorrow, it's going to be good to get in. But I'll give you a little secret. If I've got a PST weekly, daily, and the time is right, even today on Monday, despite the fact that it's not a swing day, I will take that trade, because a PST level on the weekly and the daily, if my bias is to the upside, which it is going to be magic trading. Okay, so it's going to be really good and powerful. But if it mucks around here and then goes down here tomorrow, that's even better, because I've got a swing day, I've got a swing hour, I've got a price. When they all come together, I'll be bang going in. So now, knowing that information on anything I'm trading, correlating it to other markets is great, because I can say, okay, so around these times, if gold has come to this price and it's going to turn around at this hour, then I can check out the other things that are correlated to gold and say, you know what, this should also be turning around. Well, is it a good price? Then I can match it to a PST price. If it's a PST price, again, that's great. Or sometimes it'll be close to a PST price, and I might say to myself, well, it's close enough, will go in. Okay, or sometimes what we do is wait for a U-turn application. So once the market starts to turn around, I get the turnaround signal, I go bang in, and then you put the stop loss under the low that it did at that trading hour. And the beauty about that is your stop loss is going to be very, very tight. So when trading multiple assets, what you can do is actually correlate time and price with you know, assets that are kind of like correlated to each other, because they move together. The volatility then comes together. The volatility is really important for us. That's why I got the PST and the timing. So sometimes getting those together are going to give us a good level to get in. And then if you're diversifying your asset classes, you also know that, you know, markets are moving together. So when some things are going up, some things are going down. For example, you got the euro dollar, but when the US is going up, then Aussie dollar is going to be coming down, New Zealand dollar is going to be coming down. They're kind of correlated in what's going on with respect to the US dollar. And same thing with gold with respect to other markets, and indices correlated, they're going together, and so on. Once you've got that correlation, then you can kind of like match the swing days, hours, and pricing together, and you can cross-check as well. And that cross-checking is really important, because that's where your money management comes in, because time and price is your edge, and then you add to that your minimum risk pricing model, then your risk is very small and your returns are going to be really, really good. Now, the key features for multi-market traders is you want to be synchronized. Okay, so you want to see different assets align with similar timing windows, and that will reveal higher probability trades. Okay, like I mentioned earlier. The second thing is a swing day forecasting. You got to receive exact projected dates and times for upcoming changes before they happen. This is why what we have is pre-calculated. Now also you can see here I've got the full month of June. All right, the full month of June is here. In fact, today I'm going to be working on the second week of July. I already finished the first week of July, and I'm going to put the first work on this rest of July this week, and then the full month of July will be added on the last 10 days of June. So it'll be around 20th, 21st of June. I'll add those in as well. Now, knowing the future is important, and you want to do a preemptive strike rather than wait to get knocked on the head and then take a reactive measure. So knowing this in advance is going to be saving you a lot of headache, and it's going to actually help you to overcome any risk That way, if you're wrong, even if the calculation is wrong, your risk becomes minimum. Okay, and if your calculation is correct, time and price measurement, your risk return will be really good. So forecasting in advance, knowing when high probability swing days, swing hours with pricing happens, is for us, it's like having a genie in a bottle. Now, then you got price target clarity. Now, this is really important. You have to have a target zone when you're trading for getting in and for getting out. If you don't have a target, then you're going to be left with miscalculations on risk, which is what we do not want to do. This brings us to precision risk control. If I know the swing days and the swing hours, plus the pricing, I've got something that matches a technical level also based on a time cycle model. This is so important because then I can have a tight stop loss. And this is why when we're doing trading, more often than not, you'll see us really sticking tight stop losses around. For example, this 3,450 on gold was a target from last week. And in fact, I had few targets up on the way and they all happened. And the reason they all happened is because I had a PST target. And in fact, I also put that on x.com that we should be going for that 3,450. And before that, we also had 3,385. Okay, that was also a target which the market made. And then the market on Friday went up into close to 3,450, and now you can see we're up here at 3,450. Okay, so what we want to do is continue with the move. So on a swing day, we want to make sure we're getting in at the right time and price. Okay, so I'm back. I just had a call, so I had to give a bit of a pause, but now we're back in action. So we've got precision risk control as well. You're entering few trades. Obviously, in the world of quant trading nowadays, which by the way, our company as fintech company, we're also engaging in, we're using timing as a precision tool for entering trades and exiting trades. What we're also doing is with time and price precision risk control. As I always say in my videos, if I am wrong in a calculation where price and time are correlated, I don't want to be in that trade. I get out of that trade quickly. Okay, and there are some moments when I can measure volatility. This is why sometimes, like here as well, you'll see me making comments. Like today's Monday, and I'm thinking the market may have sudden moves, right? So if it does have sudden moves, I want to make sure I'm a bit more on top of my game. I want to keep an eye on the market and make sure that, you know, I'm not in the middle of anywhere when trading. So for example, for gold, I want to make sure that if I am trading, I want to be down here somewhere, making sure that I'm at a PST level at the right time on the daily and the weekly. So this 3,396 on the weekly and a daily plus the 3,391 is a weekly pivot. For me, they're going to be interesting levels. And if I am wrong, that's fine, because the stop loss should not be far from this weekly pivot. And when the market does come here at these trading hours, I'll be checking those volatility movements, and maybe we'll catch a U-turn going to the upside rather than just diving in. So knowing the hours of volatility is important also, because that's the place where you get chopped up. Right? So getting chopped up is not something what we want to do. Instead, we want to make sure if we're going to buy, we have a time and a price, and we can also wait for a U-turn, or on a smaller time frame, we could wait for the impulse and the pullback to enter that trade. So we've got a few options there, but this is really important for precision risk control, and we want to make sure we've got an edge, not just in trading with technicals, time and price, but also with our money management. So the strategy you have, your edge, should also ensure that you consistently enter trades with a smaller risk, similar risk size, which should be small, it shouldn't be huge. Now, the power of a unified time and price strategy. First of all, it allows you to be fast in your decision making. If you understand, like we took a look at the indices, Thursday is a common day for all of them, and then I've got a euro dollar Thursday can be a big day message on there on the club members area, then I'm thinking to myself, okay, so Thursday is a day where I need to be, extra careful, and there might be a good position in there where I can get in and really just go with it. Okay, so then if I know that already on a Thursday, then I could say to myself, wait a minute, is there news on a Thursday? So that's also something to look out for. So if I check out the news, so I'll be coming here on Thursday. All right, so look, Thursday, I've got initial jobless claims, but the US is closed. All right, so US has a holiday all day. So that's also an interesting thing. On Wednesday, we've got all the statements. So if Thursday is a swing day, and on Wednesday I've got all the news coming out here, then the push can lead to a target on Thursday where the market can reverse. So that's also interesting. Not to mention that despite the fact that it's a holiday, there is still news coming out. So then I can say to myself, okay, well, Wednesday all the big guns are talking with the Fed, economic predictions, FOMC statement, interest rate decision, and so on. So then I could go into these hours, and then I can say to myself, well, on Wednesday, do I have hours? Okay, so let's take a look. So those are the news, right? Those are the news in the hours. So I come to Wednesday and I check myself. Remember, I'm UTC +3, so this is the news period for Wednesday, and this is 3:30 p.m. my time, so that's going to be around 8:30 New York time. So I should be checking here. As you can see, I've got 3:45, okay, and before 3:45 I've got 2:20. So I should be, if I'm going to enter that news trade, which I can if the price is right, at 2:20, because if the market is going to move, it should move nicely until 3:45. So this 3:45 is already telling me that there should be a move into 3:45. So the market is going to make a move, and the setup for it is going to happen at 240, right? 1440. So then at 1440, I've got to check where I'm at with the market pricing. And as we get to the news at 3:30, we should expect a move pushing into 3:45. If this push is a nice push, it's not a reversal point, it's a nice push, then any pullback is game to push even further. And I've noted here, look, if we find direction, we should target 1030. Now, I've posted this on the 21st of May, right? This is June, so I posted that in May, and I posted this in May as well. Now, in May, I didn't know this was coming out. No news about what the news is. I don't have an idea of what's coming out and when that's coming out, but from May, I already have the hours. So then it starts to make sense. Okay, if the market finds direction, great, because I know how far I can follow it, and that's 1030. So that's already like a good information that I could use, right? So I don't have to panic at all. Accordingly, okay, this enhances decision-making speed. It reduces your emotional reactivity. You just don't get emotional. If your time and price is wrong, you take a small hit, and then that's it. You look for the next position. It increases consistency. This is really important. Consistency across volatile sessions. You know when the volatility is. You know the days when the action's going to happen, and you've got the setup hours. Plus, it builds confidence in portfolio level strategy, because you can actually correlate anything you want to. You can in fact correlate any stocks. If you've got stocks that are correlated, you can do that as well. It's just a matter of calculating it. So then you can measure them the same way you're measuring anything, like here with gold indices and the euro dollar and so forth. So this real edge in the market, as you can see, is when we're all trading with algorithms. We have to understand that it doesn't matter what algorithm people come up with, it really doesn't matter. At the end of the day, it's going to be based on the technical indicators that the world has already come up with. Okay, whether it's volatility indicators, whether it's volume indicators, whether it's moving averages, it doesn't really matter. At the end of the day, any quant trading system will integrate into it some kind of indicators calculation, or they will come up with an indicator calculation or a combination of indicators that calculate certain things. But timing and pricing at the same time is a real breakthrough, which we're also moving to implement in our quant trading as well. Also, if you haven't seen our quant trading website, here it is. This is CMA Technologies. Let's get there. Okay, this is cmatech.co. If I move this down a little bit here, as you can see, all right. And this is where we've got some quant trading models as well. Actually, we've got two models here, the TCS and the UBS. They're actually for hedge fund style trading. UBS is for hedge fund style trading. This is for smaller accounts, and we've also have two new ones coming up that are precisely qualified for high frequency trading using the same methodologies at a micro level. All right, so having an edge is what we need to have when we're trading. So you want to look forward when everybody's looking back to see the future. Now, technical analysis, yes, looking back to see the levels for the future is great. We use it, it works, and it works good for us. When you add timing to it, then it's a bingo trade. You got a level, you got a swing day, you got a swing hour. Okay, and that's where everything comes together. So trading in that way really is your beautiful edge, because that edge also influences how tight and how minimum risk your money management is. So having a forward-looking tool is like gold. That's it. We predict the timing and the pricing of the next big move. This is why the PST also has, as you can see here, a weekly and a daily too. So I've got the daily pricing, I've got the weekly pricing, and I want to move according to that weekly price motion. I want to bring time, space, motion together. And if you calculate them all together, time, space, and motion, then you should come up at a specific time for a specific price. Okay, so a lot of times people are using methodologies where time and price, they're not correlated. So what we want to have is a time and a technical pricing model where price is adapting to the changes that are happening in the market and then coming together with the time. Okay, that's why we have time, price, and motion. It's the whole concept of a three-dimensional universe. So when you bring them together correctly, the constantly changing market moves should at one point or time match time. Okay, and when that time happens, when that point along that timeline happens, where you got a price time correlation, that should be the place where the market should move. So having that in advance, knowing that in advance, is going to save you a lot of time, because you got it on the weekly, the monthly, the daily, and also the intraday as well, because that's why the smaller time frame gives us a good indication of when that's going to happen. Okay, so if I know at the right price, at the right time, at the swing day, we should be having a bingo day. And until then, we don't want to trade. This makes your trade selective. You don't want to be jumping in. So where are we? You actually begin to be more selective in your trading. I don't think I've noted it here, but I've noted it in other videos. All right, so you become selective. You're not jumping in and out all the time. So despite the fact that high frequency trading is now, kind of a fashion, there are also other ways where you can trade more relaxed and make more money actually by just chilling out, or you can apply your technical analysis tools or your indicators. Let's say you're an indicator trader, right? So you got yourself an indicator, or you got yourself a quant model, a certain style of trading. You can say, well, wait a minute, it's a swing day today, so what I'm going to do is look for a level where the market should turn, and when that happens, I'm going to turn on my robot. All right, turn on the bots at that day, at that hour, at that price, and give them the direction. Because sometimes we, for example, with this one, UBS is a one-sided strategy. It buys, it just buys. And sometimes when we explain this to people, it's like, well, you know, if it just buys, is it going to be like really good? Because the markets, you know, in crypto especially, it's like up and down and up and down and up and down. So sometimes it's like a lot of hard work for us to explain to people, if you buy at the right time and price, you will make money. Okay, so by not shorting it, we're kind of reducing the risk by 50%, because you can lose on both ends, right, buying and selling. And also by just entering at right time and pricing, you can kind of at least cover the trade, at least still go up certain ways in order to take profits. And this is why UBS, it's like a ATM machine. You know, if you have you need a high account for it, obviously, but the mentality, I'm just trying to explain the mentality here, that it's a long-term investment, but it brings you day-to-day money. But it's just entering one way. So even if the market crashes, you're still making money, and it's hard to believe, but you know, that's how it works. And this is how it works. It just buys. Even if the market is going down, it buys, and it's still making money. And that's the beauty about it. So this is how you can like reduce risk if you're preemptive. Okay, if you calculate in advance when things are going to happen. Okay. So this is a technique where your probability in trading is much higher than just trading on technicals. And for example, if you're trend following, most trend followers will lose more often than not. So it's less than 50% according to research, the success rate. And the only reason they become powerfully profitable is because they follow it for ages. But if you have a smaller account and if you're day trading, you're not following things for ages. You're just, you know, getting in and getting out, because we're keeping positions maybe like for a few days, or we're getting in and getting out on the same day, depending on the time and price. So accordingly, depending on the strategy, or depending on the trader style you are using, you know, waiting for a trend and then getting in, you got 50-50 chance, less than 50-50 chance of winning. Plus you got to hold it for ages, and for a lot of people that's just nerve-wracking. And if you don't have a big account, and if you don't have the nerves, it's just not going to pan out for you, and this is why a lot of traders fail. But if you got time and price correlated together, you can get in and get out faster with minimum risk, and you can definitely increase your account. So this is really a way to do things smarter, because you know when to trade, at what price to trade. All right, so I hope this little video help. If you want to read the article, you can at globaltrader.club. You can also find my articles here at the fintech website, adea.llc, where actually, as you can see, we've got a bunch of stuff here as well. At the bottom I've got the blog, and you can read all these articles here as well. And if you have any questions, feel free to touch base, get in touch, and we're more than happy to help. In the interim, have a good one and good day.